Hi everyone. Welcome back to Inner Mind, your go-to channel for insights on finance and fraud analytics. In this lecture, we'll be diving into the credit card life cycle, understanding how credit cards are applied for and what happens behind the scenes when you submit an application. We'll start with the basics, how to apply for a credit card and what you need to qualify. After that, we'll get into the exciting part, the back-end process. This is where all the technical checks happen to get your credit card application approved. Let's explore this step by step. So when you or anyone applies for a credit card, a whole new application process begins. There are many ways to apply. You can do it online, directly through your bank branch, or you've probably seen those stalls at airports where they offer credit cards. Yep, you can even apply through those stalls. Once you've expressed interest, the first thing they'll do is ask for some basic information. They'll check whether you're eligible for a credit card, and if not, why not? But if you are eligible, they'll guide you on what documents you'll need to proceed. The initial details they ask for are things like your demographic information, name, age, address, and of course, your identity proof. But that's not all. They'll also want to know about your financial situation. Do you have any loans? Do you already have credit cards? What's your income like, and what other financial commitments do you have? Based on all this information, they'll suggest the best product for you. Maybe you qualify for a premium card with lots of perks, or maybe a non-premium card is more suited for you. They'll also tell you what your credit limit might be and what benefits your card will come with, whether it's a travel card, a shopping card, or something else. Now, let's talk about what's happening behind the scenes. All the information you provide goes into their system, and the first thing that happens is a basic validation. They'll check whether you're a new customer or an existing one, and then they'll start calculating your credit score. This is crucial because your credit score tells the bank how likely you are to pay your bills on time. But it doesn't stop there. They'll also generate a fraud score, which is kind of like a risk assessment. This score helps them figure out if you're likely to commit fraud or default on payments. They might even get help from third-party institutions like credit bureaus to check your credit history and background. Your credit score is constantly changing based on your financial behavior. If you miss payments or default on a loan, your score goes down. But if you pay on time, your score goes up. A good credit score helps the bank feel confident in giving you a card. Once they've gathered all this info, the bank will decide what to do next. If everything looks good, they'll approve your application. But if something seems off, they might decline it or put it under review. A review usually means they need more details to clear up any confusion. Maybe you forgot to mention a loan that they found out about through their system. After approval, you could end up in one of two situations: upsell or downsell. If the bank thinks you're a low-risk customer, they might offer you a better card than you originally applied for. This is called an upsell. But if your fraud score or credit score isn't that great, they might offer you a card with fewer perks or a lower credit limit. That's a downsell. Of course, if the risk is too high, the bank could simply decline your application altogether. And that's it. If you've made it this far, I hope you now have a clear understanding of how the credit card life cycle works, from the application process to back-end approvals and risk assessment. If you found this video helpful, please do like, share, and subscribe to the channel. It takes a lot of effort to make these videos, and your support means the world to me. It helps keep the channel going and motivates me to bring you more valuable content. Thanks for watching, and I'll see you in the next one.